Hello and welcome to this video on technical analysis of stocks. In this video, we will discuss what technical analysis is, how it works, and how you can use it to make informed decisions when investing in stocks. What is technical analysis? Technical analysis is a method of evaluating securities by analyzing statistics generated by market activity, such as past prices and volume. Technical analysts believe that the market follows trends and patterns that can be identified and used to predict future price movements. Technical analysis is based on the idea that history tends to repeat itself, and that by studying past market data, analysts can gain insight into the direction of future price movements. How technical analysis works. Technical analysis involves studying charts and other market data to identify trends and patterns. Technical analysts use a variety of tools to analyze market data, including charts. Technical analysts use charts to visualize market data over time. They look for patterns in the charts that can help them predict future price movements. Indicators. Technical analysts use indicators to help them identify trends and patterns in market data. Some common indicators used in technical analysis include moving averages, relative strength index, RSI, and the stochastic oscillator. Support and resistance levels. Technical analysts also look for support and resistance levels in market data. A support level is a price level at which a stock has historically had difficulty falling below. A resistance level is a price level at which a stock has historically had difficulty rising above. How to use technical analysis to make investment decisions. Technical analysis can be a useful tool for investors who are looking to make informed investment decisions. Here are some steps you can take to use technical analysis to guide your investment decisions. Identify trends. Start by identifying trends in the market data. Look for patterns in the charts that can help you identify whether a stock is trending up or down. Use indicators. Next, use indicators to confirm the trends you've identified. Look for indicators that support your analysis of the market data. Look for support and resistance levels. Identify support and resistance levels in the market data. These levels can help you determine where to set your buy and sell orders. Use stop-loss orders. Finally, use stop-loss orders to limit your losses in case the market moves against your position. A stop-loss order is an order to sell a stock when it reaches a certain price, in order to limit your losses. Conclusion. In conclusion, technical analysis is a powerful tool that can help investors make informed investment decisions. By studying charts, indicators, and support and resistance levels, investors can gain insight into the direction of future price movements. While technical analysis is not a perfect science, it can be a useful tool for investors who are looking to make informed investment decisions.
Thanks for watching the video. Please subscribe to channel for more such videos on such important topics. Like and share with people to keep us motivated to bring such useful information.